Welcome to Blockstream Talk number 1. Our conversation today is with Dr. Adam Back, the CEO and co-founder of Blockstream. Dr. Back is not only the inventor of proof of work, but I think is probably one of the only people in the industry that can talk knowledgeably across the multiple disciplines that we now group together and call Bitcoin: trading, economics, game theory, mining, not to mention the technical nuts and bolts behind Bitcoin itself. For the conversation today, though, I really wanted to focus on both the history of Bitcoin, because I think there's a lot of important context there, but also the future of Bitcoin, where Bitcoin is going, and what its biggest challenges are going forward. I hope you find this conversation useful. Welcome to Blockstream Talk podcast number 1. My name is Jesse Knudsen. I'm VP of Financial Products here at Blockstream. Of course, for episode number 1, we have to have Adam Back, our CEO and co-founder. So thanks a lot, Adam, for taking the time to do this.
Hi. So, first episode, Blockstream's podcast.
Exactly.
Okay.
Yeah, the Genesis episode. So what I want to focus on today is kind of the Adam Back backstory, how you got into Bitcoin and the early days of Bitcoin, the history of it, because I think, for a lot of people like myself that maybe came in a little bit later, that's really interesting context. And I think, offers a bit of color on the trends and challenges that are playing out today in Bitcoin that maybe some of the people newer to this space aren't as aware of. So jumping into it, I think, Bitcoin is really interesting. I think one of the things that's interesting about it is that you see a lot of patterns and topics just constantly get recycled. And I don't know if that's because of the cyclical nature of the halving cycles or what, but, Nick Carter has the FUD dice. Fidelity has the 6 common criticisms of Bitcoin. I think there's actually, it's probably up to 10 or 20 now, but one of the mainstays is that Bitcoin is old tech, right? And so you often hear people criticize it and say that they've got something newer or better. And I think basically the base of that criticism is that the first iteration of something is not typically the best, and it's not the one that usually ends up surviving and winning in the end. So I think people who often make that criticism probably don't know that much about the evolutionary history of Bitcoin and some of the Bitcoin-like digital currencies that came before it, like eCash and B-Money and that kind of stuff. So I was wondering if, to start it off, maybe we could talk a little bit about the evolutionary history of Bitcoin.
Yeah, I think, of course there are, wider sort of generic technologies that are required, like public key cryptography, hashing functions and things like that. But, and I think the white paper maybe, the Bitcoin white paper maybe cites a couple of those things, like ECDSA, digital signature algorithm, but like skipping those which are, very widely known and sort of generic underpinnings for like a lot of internet security. And bear in mind also, Bitcoin doesn't directly use anything very esoteric for the most part, which is a good thing. In cryptography, you don't want to do, new invented cryptography, building blocks, or get too creative like that, because it's fragile. And if you're not an expert in it, you will tend to end up making a mistake. And it would be doing superficially the right thing, but it would make mistakes. So being conservative and not too adventurous with the technology building blocks and understanding how to combine them is key. So then in terms of sort of electronic cash, precursors and building blocks, there's a lot of interest to have electronic cash on the internet. And certainly for, in the early 90s, there wasn't, many of the things we have today, like PayPal, which are superficially, anybody can sign up typically. It's much easier access. At the time, to receive payments, you need to be a merchant processor, and it's pretty difficult to get one of those. And it would be all covered in KYC, and you'd have to pay with a credit card or a debit card, and not everybody has one of those globally. So it was a pretty balkanized, restricted, and cumbersome payment system that was available, and most people weren't using it, other than to buy things, right? Or bigger stores to sell things. So people were interested to have something more internet native for electronic cash, and for that to have privacy like physical cash. And so actually the first, as I'm aware, kind of privacy enabling piece of electronic cash technology was by David Chaum, which is his blind signature technology. So it's actually quite an elegant and simple looking piece of cryptography once you see it, but it set a lot of people thinking about, well, the benchmark, like this is possible. And so after that, there were many academic papers incrementally improving on that. So I think you can scroll forward from that to, mid-90s, early to mid-90s. Chaum had formed a company called DigiCash. They'd actually, developed the technology as a central server model, as almost all of those electronic cash protocols were. So unfortunately, you were relying on the server as a single point of failure that if the server would go offline or the company operating it would go out of business, all the electronic cash tokens would effectively disappear, because the double spend database tracking which coins were spent was on the server. And so that in fact happened with DigiCash. They set up a demo server. I probably have some unspent coins on a backup somewhere, but you can't prove that they were spent or not at this point. And so that caused, focused people's attention on the fact that the single point of failure was an issue, and so the next electronic cash systems were more decentralized in nature, so reactive to that, basically. So, in 1997, I proposed Hashcash as a sort of micropayment system to get around, the problem that it's difficult for people to pay, and it's not very decentralized because there are, merchant processors and things like that. And DigiCash in particular was sort of integrated with banks as the way that they saw that working. So they relied on permission effectively. So they had a demo server that issued some free tokens, and people like the cypherpunks set about trying to sell things like t-shirts and stuff like that for these tokens to see if they could bootstrap a value, because they were supposed to be limited in number. But shortly, partway through that experiment, the company went under and the database went offline. So from there, I proposed Hashcash, and the thing that enabled it to be more decentralized is there was no central database, so it was more scalable, but it wasn't respendable or sort of redeemable, right? So it was created in an electronic world. It was mined, so you didn't need an interface to buy coins. They had a cost to create, so it satisfied part of the equation. It didn't satisfy transferring value to the recipient, but it satisfied that it cost the sender something. So it became a kind of postage stamp for anti-spam, denial of service, and things like that. But immediately that I proposed it, it seemed to cause many people to see an analogy with physical gold, like that this is digital gold, and to try from there to work out how to make it respendable. So all kinds of ideas were brainstormed, and lots of like mailing list posts on a cryptography and cypherpunks list about brainstorming about how to do this over a period of years, actually. Some of them anonymous, because the cypherpunks were interested in privacy and remailers and things like that. And actually the Hashcash system was partly reactive to spam in the remailer network, and I was running a remailer at that time, and people would spam through it. So it was a kind of way to preserve privacy while combating spam as well, right? So in any case, then the two major protocols around that time, so it's like a year later, 1998, Hashcash was in 1997, were by Wei Dai with B-Money and Nick Szabo with BitGold, and they were both using this kind of mine the coins using Hashcash, but then work out, an outline of how that could form a decentralized, respendable electronic cash system. So, they both had the concept of a broadcast ledger that was verified by many nodes, but they were, not quite implementable, I guess, and or there were details to work out, and there was a bit of human invention involved, like supernodes or a group of supernodes, like a federation, that would have to decide periodically what the difficulty should be, or in BitGold's case, it was just assuming that people would create coins as they wished, and if a lot of coins were created in a period, that, well, I think he was calling those stamps, so people would create a lot of stamps in a period so that you could create as many or as few as you wanted. And if there was an interval where a lot were created, they would be considered not very scarce, so you'd need, and then you'd have a specialized market to assemble rare and common stamps into a standardized value coin. So apparently this happens in stamp collections. There are market makers that assemble standard values. So he had that kind of thinking, but there's a lot of human involvement there. So that in terms of did that, what held that back? I think it was the human involvement in that, and of course it didn't get implemented for related reasons. So the next bit of deployed technology actually was RPower, reusable proof of work, by Hal Finney, and that one actually didn't directly solve that difficulty problem. It still had the same problem, but it was a kind of combination of a Chorm server, so it had financial privacy, where Waydice and B-Money and Nick Saba's BitGold, I think, had similar privacy trade-offs to Bitcoin in outline. So Hal Finney's had much stronger privacy, but it was centralized. And he used this, at the time, new type of hardware, which is so-called trustworthy computing hardware.
I was going to say, do you see it as so there's a lot of, projects and effort that came in before it. Do you see it as like an incremental improvement on these previous efforts, or is it a big leap forward?
I think it solved a couple of key problems that people hadn't figured out how to solve. And I think given, the cypherpunks, particularly like, Hal Finney and some of the others were implementers, if they had figured out how to solve the missing problems, they would have rushed off and implemented it. So I think the point is that Bitcoin design did solve some key problems, and I think the big one is the difficulty adjustment mechanism. Basically, the previous systems, it sounds simple in hindsight, but these things never are. If you're trying to find a solution to something, and hundreds of people that are interested can miss something, and then when you see the solution, you go, well, that looks simple. Why did nobody think of that? And that's just the way it works. So I think that the previous systems try to target a stable price generally. Yeah. So those systems had too much human involvement, and so Bitcoin was able to define something that could be fully validated by a distributed system, an automated system with no human involvement, which is that it can control the rate of supply and then just leave it to the market to determine the price, and the price will be what it is. And so with that, different way of looking at it, it becomes possible to make an automated system. And of course, there's
it's a supply curve in the issuance.
Right. There's quite a bit of ingenuity, I would say, in the details of that. But I think basically, if somebody had popped up on the cypherpunks list and said, "Look, do this," it might have been enough for other people to fill in the details. I have a sort of suspicion that because there are some of the sort of design problems are established computer science problems. So a lot of people have heard at this point about the Byzantine generals problem. And so that is basically a coordination problem in a distributed system. And so, but it works with an identified set of participants. And so you have to have sort of identity. And the problem in a distributed system, like a permissionless distributed system, is there's no central party that you can trust to, issue identities, one per computer, one per human, something like that, right? And so you get a Sybil attack, i.e. that one person can pretend to be a million people and gain some advantage. So it seems to me that, I'm sort of guessing at the thought process, but if you connect the thought process that led Satoshi to using the proof of work both for mining and creating coins and to processing transactions in the network, could be that if you look at it, so that there are some other systems that use Hashcash for creating pseudonyms. So you have the same problem with like domain names and handles in chat systems, things like that, right? Which is people will come along and take all the names if they're free. And so you want to put a cost. And so there were some systems that didn't use credit cards, but used Hashcash proof of work to reserve names just to stop, make it expensive so they take all the names.
Yeah.
So it seemed to me that you could bridge the distributed system that's Bitcoin. This is sort of like looking at it in hindsight, how that thought process might have occurred. I don't know, nobody knows why or how, but this seems logical, right? So if you look at it, the Byzantine generals problem has identities, and you've got a system without identities. And if you look around, there are people using Hashcash proof of work to have a cost to create identities. So if you assemble the two things together, you make each node do some work to get an identity, and then it can participate in a normal Byzantine generals problem for like one block, and then you can do it again. And if you'd arrived at that combination, you might realize, well, maybe you don't even need identities. You can just sort of anonymously do work proportional. So anyway, that is finally the way that Bitcoin works. So this is kind of some supposition. I don't know if that's actually how that was arrived at. So I think Bitcoin started from a different direction, which is it provided a working decentralized solution. But I think people sometimes have the intuition that the first version of a technology is a kind of prototype and has a lot of room to improve, and that's generally a reasonable assumption, I would say. But surprisingly, it seems that there's something unusual about Bitcoin. So in 2013, I spent about 4 months of all my spare time trying to find any way to appreciably improve Bitcoin across, scalability, decentralization, privacy, fungibility, making it easier for people to mine on smaller devices, get more anonymous coins, like a bunch of kind of metrics, sort of that I consider to be metrics of improvement. And so I looked at lots of different, changing parameters, changing design, changing network, changing cryptography, and I came up with lots of different ideas, some of which have been formally proposed by other people since. But basically, to my surprise, it seemed that almost anything you did that arguably improved it in one way made it worse in multiple other ways. So it made it more complicated, used more bandwidth, made some other aspect of the system just objectively worse. And so I came to think about it that Bitcoin kind of exists in a narrow pocket of design space. I mean, the design space of all possible designs is an enormous search space, right? And counterintuitively, it seems like you can't really significantly improve it. And so that without, and bear in mind, I come from a background of just have a PhD in distributed systems, and I spent most of my career working on sort of large scale internet systems for startups and big companies and security protocols and things. So I feel like I have a reasonable chance, if anybody does, of incrementally improving something of this nature. And basically I gave it a shot and concluded, wow, there's literally basically nothing. Everything you do makes it worse, which was not what I was expecting. I was like, great, let's, improve the privacy, improve the fungibility, make it more easier to mine on small devices, make it so that you can participate in mining in a very minimal way without needing to use a pool, and basically nothing appears to be possible. And so that's not what people expect, but they don't, they haven't gone through this process, so they don't have this realization. So, when people say that, all these altcoins, they don't have any innovation, that's not actually, that's actually a grounded statement. It's actually true, in the sense that, they wanted to do an effect, so they cut some corners, made some trade-offs, and they did it anyway. And each of them is typically objectively worse, typically much worse because of the kind of lower network metrics and so on, right? So they're de facto less decentralized, or make the system much more complicated. I think a lot of people don't realize that complexity is bad for security and dependability. So anyway, that's a kind of counterintuitive situation. So it's not, it's certainly not that anybody in Bitcoin is in a Bitcoin, technology space is anti-innovation, or that Bitcoin is old technology. I mean, I think, for example, people have the wrong intuition that, the Bitcoin just ran from the beginning. In fact, it's been, the software has changed remarkably, like been refactored, rewritten, optimized, the network protocols optimized. I mean, the initial sync time when you start a new node and sync has been completely redone like 4 times, and is sort of 10,000 times faster than it was at the beginning. So you can still sync an old node, but people's intuition that, it's the code base is not changing is just wrong. You can look at the code base and see that it's one of the most active open source projects in existence by code changes and contributor metrics and things like that. So, and it's certainly the case for the robust R&D as well, that a lot of R&D comes out of the Bitcoin and associated space. So I think sometimes Bitcoin suffers from not having a marketing department. There is no Bitcoin the company, there's no funded Bitcoin communications or coordinated marketing, and so anything that is discussed in the open, so people get to see it, see the trade-off discussions. So it doesn't really stand up for itself, right? I mean, and so it's a little disappointing when people claim that Bitcoin is toxic, or that Bitcoin is stagnant, because the facts are actually inverted. It's just that there's no marketing department out there explaining these kind of computer science background and technical reality things.
So, and when you saw that the Satoshi kind of solved for that problem, when did it strike you that Bitcoin could be a big deal? And did it seem very far-fetched that it could become what it is today, or did you see at that time that, well, this could be a really big deal that could, challenge legacy financial systems and the way countries operate, and all the things that we talk about that seem actually not that far away now?
Yeah, well, I mean, they seemed a lot further away at the time, and so I heard about it through probably having the first email from Satoshi Nakamoto, just asking about the citation for Hashcash, and I sent him a few papers and things. I thought the technology was interesting, but the question mark was, would it bootstrap? And it took a few years before there was an exchange at all, right? So, it would basically, I mean, I wasn't involved in pre-2013 really, other than these early communications and, looking at the news once in a while. That there's a big question mark about whether it bootstrap, and the people involved were presumably, mining. I think mining is a big part of the bootstrap story, because there's a psychological phenomenon where people ascribe value to something that they put ingenuity and effort into, even if it doesn't have a direct value. It's kind of like, people do some craft or some art, or, in this case, figuring out how to configure this clunky, hard to configure software that's doing mining, right? So it wasn't very point and click. So anyways, I think it took a while to bootstrap, and that was my question mark. Would it bootstrap? And then I would say, clearly it did at some point, right? It reached $1. I think that was a kind of wake-up call for a lot of people that, it's bootstrapping, it's still around, and it's reached $1. Wow, that's something. So, because I was familiar with the previous electronic cash systems, Bitcoin makes some quite different trade-offs. So, in particular, the security model takes a bit of getting used to, because in the other systems, you have, a very high security model where you need sort of, it's kind of like breaking digital signatures or something, you need an enormous amount of compute, so it's unrealistic to attack it.
Mm-hmm.
But the trust model assumptions in those systems are that there's a trusted central server, so it's kind of, so the academics that came and looked at Bitcoin took a while to be convinced that this was a plausible design, because the security model was basically that the good guys have more hash rate than the bad guys. So like 50-50, or at least equal cost in attacking the system as defending the system. And usually with public key cryptography, which is the norm with other electronic cash systems, the defender has an enormous advantage, just like an unimaginable advantage. So it's almost impossible to do anything to it on the attack front, except for the fact that they're central servers. So the central server is like a point of failure, or in many cases has to be trusted as well. So there's a trust problem.
So after, discovering Bitcoin in like 2013-ish and being exposed to it earlier, why didn't you do what so many of other people have done and kind of, split off made a trivial change to it, split it off, become hideously wealthy, and do atom backcoin? Why did you decide to build on Bitcoin and to contribute to Bitcoin? Other than the obvious like morality and integrity issues.
Well, I mean, the topic entered my thought process, because when I joined the Bitcoin Talk forum, a small group of altcoiners contacted me and invited me to join, to be a co-founder or join their new altcoin.
The dark side.
And so I thought about this, and I quickly came to the realization. I mean, they were asking some interesting technical questions, so I answered some of those things. But then it occurred to me, like, well, wait a minute, why do they want me to be involved? It's probably because they want you to put your name on it for marketing purposes. So I was like, well, that's kind of not very ethical. It's kind of renting your name. It's gonna, it's gonna burn your reputation, and they're gonna get the money from it, or most of it. So I was like, well, firstly, this is illogical. If you were going to contemplate immolating your reputation, you'd at least want to take the money from it and not have somebody else market it, right? Yeah. So I was like, well, I guess you could do that. And so in the course of about like 10 or 15 seconds, I went through the thought process of, well, you could, just fragment this amazing piece of technology and, create a new one, make some money, but actually that would detract from the network effect. It would be kind of destructive. And the constructive thing to do, and ethical thing to do in my mind, is to improve Bitcoin, because money is a network thing, and this is not a serious endeavor to do this. It's kind of opportunistic leeching kind of behavior. So I was resolved immediately. Okay, that's evil. I won't even consider that ever again, kind of thing.
At what point did altcoin people start reaching out to you? Was it like 5 minutes after it had its first $1 print, or was it like kind of what time did?
I don't think so. I think it was when I joined the Bitcoin Talk forum, because I guess there's a section of it, even though it's Bitcoin Talk, for announcing altcoins. Because they have a spam problem. There's an enormous incentive. It's kind of like email spam, right? It's an enormous incentive for people to market their coins. Yep. And so I guess to control the spam, they made a separate isolated, like you couldn't stop them. So they made an isolated alt section, so at least they would keep the alt advertisements over there. And so, yeah, I don't know. I mean, I guess they could have probably figured out how to email me, but as I was on a forum, that was when somebody contacted me about altcoins. And of course, But
I mean, how early was that? That was like 2013 when the altcoiners started coming around, or?
Yeah, it's 2013. Yeah. Okay. Yeah. I mean, I think I wasn't really tracking it, but I think there was a period where there weren't many altcoins, and it really became a phenomena. And I mean, actually, there was also. I kind of thought it was a bit ridiculous, because it went to extreme lengths, and it's gone through waves, so it's only actually got worse over time. I think there are now like over 10,000 coins.
And they never die. They mostly never die. Like they almost never go to zero. So it's like on the Bitcoin dominance thing, the altcoin, it just keeps getting bigger, right? Because there's always altcoins around. They seem like they never die off completely. So I guess over time there will just be tens of thousands of them.
Right. I mean, apparently there literally are. If you look on like CoinMarketCap or something, the number is over 10,000. Yeah. Well, I mean, I think it's the dominance index is kind of a bogus
Was that right?
economic metric for the market reasons that are in your background, like in particular that they are illiquid, and the obvious
Yeah.
fallacy that you've got the unit bias where somebody will create a new coin with a quadrillion units, and then you'll sell me one for $1, and now we have the highest value coin, but the liquidity is literally zero.
Totally.
And
Yeah.
so that kind of effect is baked into it because there are lots of, with 10,000 coins, of course, there are many, many highly illiquid coins which barely have a price or are listed only on a decentralized marketplace or very tiny exchange with no liquidity or basically forgotten or something, but they still have a value.
Yeah. I mean, that would really be the better way, is to use volume, but that's just harder data to find and aggregate. So I think people just default to the easy one, which is the market cap one, because you can find price and that kind of data easier.
Yeah, I mean, the other thing, as you mentioned, is that the it's a moving target, so there are always new ones.
Yeah.
So I suppose even apart from the sort of illiquidity issue, it would sort of be fairer to take a snapshot of some number of coins, let's say 3 years ago, and then look how that holds up against Bitcoin, and roll that forwards with still existent top 20 coins now, and keep that going, because otherwise it's a moving target, right?
Yeah, exactly. So Juan and I were Juan is our producer to this show. Before Adam came on, we were chatting about Bitcoin has had so many challenges over the years, and I feel like maybe you have a different view, but I feel it's kind of almost miraculous that we made it this far. That in 1,000 realities, maybe Bitcoin doesn't make it in 999. So what do you think about? Maybe you disagree on that, and what do you think were the big threats to Bitcoin over history, and then maybe we can talk a little bit possibly about one of the threats coming forward, because it looks like there's a couple on the horizon.
Yeah, I mean, I guess the regulatory risks seemed higher in the early days just because of the uncertainty.
Yeah.
And in the 90s with internet technology, it was a bit of a reality adjustment to establishment thinking that anybody could start a video blog, like such as we're doing now, right? And they didn't need permission from a government or a broadcasting authority, and they could see the truth as they saw it. And so they lost a lot of control of media and privacy of communication. So it changed the balance of power a bit. And so you could see something like an electronic cash system running into the same kinds of things, that they might feel like various parts of the establishment might feel that they should have the exclusive right to transfer money or seigniorage of printing money, right?
Yeah, I mean, there's also non-digital examples of that, where people tried to make private money out of precious metals or things like that, and were shut down by the government. They just generally don't seem to appreciate competition.
Yeah, I mean, I think that actually worked out better than I would have thought, in the sense that the regulatory acknowledgement of Bitcoin has been lighter touch, more open to innovation.
Yeah.
And of course there are a few countries that from time to time will ban Bitcoin, including some that ban it a dozen times and yet it keeps going. And there are also places that it depends on the culture and how people view things, but there are certainly countries where when they ban something, the usage increases.
Yeah.
Or they ban it through official channels and its usage grows in decentralized marketplaces, for example.
If there's a market demand for it, I mean, the market typically will find a way, I think.
Right. I mean, I think one metric for adoption that I have used from time to time is to say, there's one kind of Bitcoin bootstrap is, it would be disruptive, but to ask if Bitcoin has bootstrapped beyond the possibility to shut down.
Yep.
So, which is to say, if there was a global ban on Bitcoin, would it stop? Now, of course, nobody's really expecting anything like that at this point, but I think it wouldn't be possible to shut it down, for reasons like there are so many people with some Bitcoin and there's an interest to use it that, you would be able to ask a friend of a friend and find somebody who you could buy or sell some Bitcoin or, peer-to-peer transact and things like that. So I think it's kind of bootstrapped as a largely unstoppable piece of technology, but it's also been regularized at the same time. So that risk has receded, the risk of a ban. I think that bootstrap is interesting, and I think it's long past that point now. And of course, you've got along the way, faster than anybody expected, there was interest at first in the technology from banks, from finance institutions in a blockchain technology as a kind of open back office tech, and they like to keep up with the technology curve as new innovations come in IT and networking. Yeah. So that was interesting. And then, more recently, of course, there's been growing interest in the financial asset and, more ETFs, more futures and derivatives products from established financial institutions and, just more ways to access the market.
But that's probably, I think, seen as from a large part of the community as part of the risk going forward, right? Is that it gets co-opted in some way by Wall Street.
Well, right. I mean, I think that it's important to my mind for there to be a certain amount of balance so that enough of the currency is in individual hands. I think if too much of it is in ETFs and funds, there's a risk that I think you could draw a lesson from the so-called fork, the fork drama of 2015 era, that there's a risk that if too much of the Bitcoin circulation is in ETF or ETF-like products, then the ETF fund managers, they're thinking defensive thinking with corporate lawyers about what their fiduciary responsibility is in response to regulatory pressures or other legal frameworks.
Well, even though their own personal preferences. I mean, Arthur Hayes has a pretty good note that he sends out, and he mentioned something like that on his recent note about a certain asset manager that has the ability to influence the way that individual companies can act or behave or interact with Bitcoin. So I think that's interesting as well. Once they get big enough, they can have a little bit of sway on the network. But do you think that the kind of the fork drama, the scaling wars of, I guess that's 2016, 2017, was that the biggest existential threat to Bitcoin to date, do you think?
Well, I think the regulatory risk, which, for most of the world didn't really materialize and actually became clearer over time, was earlier risk perception. And I think the fork drama was, in the middle of it, it looked like a potentially existential risk. And that's why people were pretty defensive and activist in trading and communicating about that. So I think that risk was resolved in the right direction and was instructive to everybody. Whatever your views going into that, I think the way that it resolved is interesting. And I would say the lesson is that the market prevailed.
Yeah.
And that's generally a good thing. But of course, it does mean that if too much of the market is in the hands of custodians, the market could prevail in the wrong way.
Exactly. Yeah, exactly.
And I think there are ways to do. So one of the interests to use a custodian is because not everybody is an IT expert, and people are rightly worried about mismanaging backups and physical security of backups and things like that. And so that's why they will sometimes leave assets on a Bitcoin exchange or put it in a ETF-like product. So the US doesn't have an ETF, but Canada does, and a number of other countries worldwide do.
Yeah.
And but I do think there are opportunities unique to the smart contracting capabilities of Bitcoin in particular, that you can kind of have your cake and eat it. So one example is the Blockstream Green wallet, which has a multi-sig arrangement and a time lock, so that basically you can start with a 2 of 2, and if you lose one of the keys, then it kind of falls back to a different access method. So there's a pattern there which today is configured to protect you from losing a 2-factor authentication device, so kind of second second factor. But the same technology can be used with a custodian, for example. So in a green dress server, Blockstream two-factor authentication server is not a custodian, but it provides custodian-like, some aspects of custodian-like service, i.e. the security service, that there's a two-factor authentication, you can't spend the coins, or you can't spend more than a certain percentage of the coins without succeeding at authenticating to this service provider. And so you could see that being used with a custodian too, with an additional failover, that you have the keys. If you lose the keys, eventually, after a time period, there's another clause in the contract that comes available, which is that then the custodian can, help you recover the coins and reestablish that. So it's important, an interesting distinction, because it means that the custodian can't do anything with the coins without your cooperation. So it sort of changes the balance a bit, and I think that's a good way to do things. And at Blockstream, we've done quite a lot of different bits of technology and even marketed assets that seek to add decentralization capabilities to financial instruments. So, for example, we have a mining note, which is a actual financial instrument that gives you the financial participation in Bitcoin mining over a 3-year period. And our interest with technology like this is to incorporate decentralization tech, like the new innovations in mining protocols, so that a note holder could, once we've got more technology ready to ship, that the participant could run their own node and have some input into choosing the transaction. Usually the easiest thing to do technologically is to do the centralized thing, and so most people, most service providers just do the easy thing, and therefore it's all trust us, central server. So we take we're more working in the protocol space and in the financial instrument space, so we will always try to innovate on the decentralization end of it. And actually this new set of pool protocols came out of something that we started at Blockstream in 2014. It's called Open Hash protocol, and there are new versions of that now.
Yeah, if you're an average investor, the mining space really for a long time has been an institutional only kind of game. So yeah, it is really interesting, and it's pretty cool to have a product like the Blockstream Mining Note where investors can come in and participate. And the minimum ticket size is kind of high right now, and we've definitely received that feedback from multiple people. But once that gets on exchange and we have secondary trading around it, the prices should come down, and I think it'll be a lot more approachable and digestible to more investors. And I think that'll also build out the decentralization on that product, which I think is pretty cool.
Yeah, I mean, in fact, with the that approach to market was the lightweight and fast entry to market. So we're certainly interested to use other market entry points. As you say, once it's exchange listed and actually already it's possible to OTC trade. So find somebody who bought a larger amount, and the initial sale is a kind of primary sale, but now that the first sales tranche is closed, you can buy and peer-to-peer trade, in fact, smaller amounts down to 0.01 of a BMN, which is a much lower price point.
So I think the narrative on Bitcoin has changed a little bit over time. I think initially it was focused more on digital cash, and then over time, I think particularly recently, where we've seen just these massive changes in the global economy, inflation is more of a concern that people are really looking at as a store of value, more than a medium of exchange, and kind of a digital gold. So how has that changed over time? And do you think we eventually get back to the digital cash, kind of the original narrative at some point? Or do you think that's still there with Lightning? It seems like that's been more topical recently, ever since the El Salvador kind of announcement last couple of weeks.
Yeah, I mean, I think Bitcoin has a lot of interesting features and characteristics. So it appeals to different people for different reasons. And the permissionlessness and the fact that you can, just install a piece of software on a smartphone and start transacting globally without, needing anybody's permission or an intermediary is a key differentiator. In a way, there's a sort of concept of a differentiated value, which is basically an area where the product is unique and nothing can really compete with it, or the incumbents can't compete with it. And I think that is the sweet point for Bitcoin, because conventional financial institutions simply can't do that. They're regulatorily precluded from, offer people electronic cash, basically. I mean, they can, offer people Bitcoin and sell it to them, and they can install it in wallets, but they can't offer, bank accounts on that basis. They're precluded. So I think that it's not really possible for them to compete against that. And so that is a key part of the value proposition. But I suppose in the same way that the internet was a very interesting turning point for the balance of power and, more direct user control of their electronic destiny, investors can look at that, their interest in that technology, and buy shares in it. So in the internet era, you could buy, shares in Cisco and PayPal and all these different companies, and that, if you did it at the right time, you benefited immensely from the rise of an adoption of this network technology. And so with Bitcoin, I mean, of course, there are companies too, but you can buy the electronic cash token. So I think, you can view the value of Bitcoin as tied up with these use cases. And so, of course, people can and will buy it even if they don't personally have a strong need for the permissionless electronic money, right? I mean, somebody living in a Western country, maybe they don't really do anything very interesting and they don't need it as such, but it's still very cool technology. So lots of people will do it because they think it's cool or as an insurance policy. Yeah. And of course, the on-correlation and electronic gold like properties help. Yeah. And the adoption curve has been very steep at times, so its price is appreciated very highly. So, many people will obviously buy things if the price is going up. Even if they don't have a direct need themselves, they assume correctly that other people see a strong attraction to it. And actually, it's an interesting question because, some people will talk about a sort of ETF failure point or a PayPal 2.0, by which they mean that some of these use cases could probably be perfectly viable in isolation. Yeah. So, if Bitcoin were to be only in ETFs and, literally a digital gold that can only be held in that format, that might still be financially interesting. If you can, audit the supply, see that that's happening, and have it be an uncorrelated gold hedge without the electronic cash parts, that could still financially succeed. Of course, it's not nearly as interesting to many of us, and presumably its market value would be lower, reflective of that. So I think it's interesting for Bitcoin to reach its potential in capturing both of those use cases, but that's a factor.
Yeah, it feels like in different regions, maybe it will have slightly different uses. I think kind of reminded of that seeing the adoption in El Salvador, because in Western world, I would think for people to go out and use Bitcoin to buy coffee, you definitely want to see the volatility come down. Like, I'm not going to use my Bitcoin to buy coffee because of, I think it's going to be worth more in the future, right? Kind of a reverse time value of money thing. So for maybe in Western countries where people have no issues doing basic transactions, and like you said, are not as concerned about privacy or whatever, then maybe the volatility needs to come down in Bitcoin. It needs to flatten out a little bit before it becomes attractive as a medium of exchange.
Yeah, I mean, it's kind of like being able to make a payment directly from a stock investment that you want to hold or something, right? That you have, high hopes for. And I mean, of course, some people are all in, so they have no choice, right? or they they take low interest loans as a kind of tax planning strategy to defer selling. But I think the other thing is, you get the pizza effect, as you mentioned, right? So people will buy things with Bitcoin and then years later it will turn out to be an expensive purchase. So what I try to do to avoid that is, if some things you want to buy with Bitcoin for kind of privacy reasons or because it's easier, and just like wire transfers and credit cards and debit cards are annoying. Like they're clunky, they're painful, they're error prone. So Bitcoin is just easier too, right? And so I think what I've done at times is use Bitcoin to pay for something and then go buy some more Bitcoin quickly before the price moves too much, so that I'm not going to be like really annoyed that I spent 10 times the current price on a router or something that you're trying to buy.
So looking forward, I mean, I wrote out these questions before the news of the last couple of weeks. I mean, it's had some really interesting and exciting news come out of the last couple of weeks. But what do you think is the most exciting thing to look forward in the Bitcoin space at the moment?
I mean, for the market, I think, usually it seems like Bitcoin has surprised to the upside in terms of stages of deployment. Like people have said, $10,000 is kind of, a crazy price, and now that's, in the past, right? And sort of on the price front and in terms of types of users, right? Recalling that earlier, nobody would have imagined that banks would want to be involved with Bitcoin, and now we have, banks offering Bitcoin denominated bank accounts. Yep. And, sort of queuing up to get active in the space with Bitcoin as an asset class or Bitcoin secured loans. And, we're seeing some early signs of government sort of, I guess, the El Salvador news, like the sovereign involvement. Adoption. There may actually be some indirectly some sovereign mining or sovereign Bitcoin holdings or, Bitcoin reserves. So, those kind of things earlier on, people thought, that's a pipe dream. That'll never happen. Yeah. But, it seems like these things are just keep happening and happening at a faster pace than people imagine. So it's like the Chinese saying about blessed to live in interesting times. So it really does feel a lot like that, because all these wild things just keep happening as new kind of benchmarks of adoption or new first exemplar of a type of institution. The phenomena of companies putting Bitcoin on the balance sheet, I thought was very interesting. That wasn't something people foresaw, I think, but it makes a lot of sense. Of course, the current macro environment precipitated by COVID, but the makings of it were obviously there since probably 2008, has focused a lot of people's minds on inflation, because clearly the real inflation rate is much higher than the consumer price index claimed rates and so on.
I was going to say that's another crazy one too, because just 2 or 3 years ago, I would talk to analysts and I would talk about inflation, and they would say the CPI is low. I said, no, I don't mean CPI. I mean inflation, like my kid's tuition going up every year, right? My house price going up, these kind of things. And people would look at you and just not admit that there was any inflation anywhere. And I think it was creeping higher. It has been for, arguably a generation. And you're very right that COVID just lit a fire on all this tinder that's been stacked up and accelerated a lot of trends. And Bitcoin is probably one of those big trends, I think.
Yeah.
Well, that's great, Adam. Thanks a lot for your time today. I really appreciate you taking the time and joining us on our first podcast.
Yeah, here's to many more.
Exactly.
It's been a fun conversation and covered some topics that probably haven't been put on video before, so that's cool.
Definitely. Yeah, and look forward to having you back again.
Thank you.